Hi everyone, my name is Steve Janz and welcome. I have given you the crystal question on how to do the preferred shares, cumulative and participating. You've had a chance to work on part A and you've looked at part B and maybe you're struggling. So what I'm going to do is I'm going to go over part B of the question with you right now. Are you ready? Let's begin. So we've had a chance to look at it, and what we see is that for the preferred shares, they have $150,000 of value. They have a dividend payout of 75 cents, and there's 50,000 shares. Now, 2011 has not been paid, and we're in 2012. The company is wishing to distribute $450,000 of dividends. So what we have to do first is we have to pay the preferred shareholders first for the cumulative amounts that are missed from previous years. So we have 1 year missed. So let's do that calculation. So in 2011, we did not pay any dividends. So let's do that first calculation. 50,000 times 75 cents will give us a value equal to 37,500. So for the arrears, we need to put in 37,500 here. We have to clear up any outstanding non-paid years first before we can go into the current year. Now we've done that. Let's look at the current year. Well, who gets paid first? The preferred shareholders. So the preferred shareholders will get exactly the same amount of 37,500. Now we have to look at the common shareholders. Because this is a participating preferred share, we've got to look at this in a couple steps. So the amount that we're going to pay for the current portion of our common shareholders, we have to actually calculate the percentage we are giving to the preferred shareholders. We have to treat this as fair or participating. So let's take a look and do that calculation. So the first thing we do is we have to take a look at our common shareholders and what they can receive. So right now, we are paying $37,500 of these dividends to the preferred shareholders. So 37,500 over the value of the preferred shares, 150, means that we're paying 25% to the preferred shareholders. So the common shareholders, they can receive exactly that percentage as well. So for the common shareholders, 25% times their value. And in the question, we are told that their value is $700,000 and they have 70,000 shares outstanding. So 25% times 700,000 equals 175,000. So for the current portion of the common shares, they will receive 175,000. Now, we know that the amount of dividends that we want to pay out equals 450,000. So what we have to do now is we have to use what is referred to as the pro rata or the proportional method to allocate the remaining amount. Because under here, in the total column, we have to allocate $450,000. So we have to get there. So here are the steps to get there. First, calculate what is the remaining balance. So we have 450,000 minus the amounts that we've already paid. So we've paid 37,500, 37,500. That's those two right there. Plus the 175,000 to the common shareholders. That means that we're going to have a remaining balance equal to 200,000. So we still have 200,000 to allocate. So what we have to do is calculate on the proportional method how to do that. So how do you do that? What we do is we take a look at the value of our preferred shares and our common shares. We're told that our preferred shares have a value equal to 150,000. Our common shares have a value equal to 700,000. That means that we have a total value equal to 850,000. So using the proportional method, we can now allocate this final $200,000. Let's start with the preferred shares. The preferred shares, they're going to receive 150,000 over 850,000 times the $200,000 amount. That will equal 35,294. Now this has some decimals, and students always go, how many decimals to take it? To be on the safe side, always take it to 3 or 4. Or do it in Excel, and it works out really accurately that way. So we have 35,294. So on the participation side, we're going to have 35,294 allocated to the preferred shares. The total then is 110,294 that will go to the preferred shareholders. Now let's carry on and do the cumulatives, the common shares. So the common shares, 700,000 over 850. And again, the numbers are right here. 700 over 850 times 200,000. And that value will equal 164,706. So 164,706 comes out to 339,706. Add them together, there's your $450,000 allocated. So I hope this helps you and you do really well on your test question on the test. All right, thank you everyone. Have a good day.